This lesson is going to talk about how to analyze and record an allowance for uncollectible accounts adjustments on a worksheet. Before we get into the lesson, though, let's make sure we cover some terms. The first term that we want to talk about is uncollectible accounts. Uncollectible accounts is an accounts receivable that cannot be collected. The next term that we need to talk about is the allowance method for recording losses from uncollectible accounts. And basically what you're going to do there is it's the crediting the estimated value of uncollectible accounts to a contra account on that one. And one of the things that we're going to deal with quite a bit in this chapter is also a term called book value. Book value is the difference between an asset's account balance and its related contra account balance. And then finally, the last thing that we need to know is the book value of accounts receivable. And that is the difference between the balance of accounts receivable and its contra account allowance for uncollectible accounts. So the difference between accounts receivable and allowance for uncollectible accounts. Those are the terms that we need to know. Before we get into a little bit more of this, let's start talking just a little bit about planning and recording for these. Allowance, when a business sells anything on account, it's always a risk. So you have to make sure that unfortunately, there's going to be some customers that will never pay for their stuff. So the business has to estimate how much of that'll be. This is a cost of doing business and is recorded as an expense in the same accounting period the revenue was earned. Estimated uncollectible accounts expense at the end of the fiscal period accomplishes two objectives. It reports balance sheet amount for accounts receivable that reflects the amount of business expects to collect in the future, and it also recognizes the expense of uncollectible accounts in the same period in which the related revenue is recorded. To record estimated uncollectible accounts, an adjusting entry is made affecting two accounts. The estimated amount of uncollectible accounts is debited to the uncollectible accounts expense and credited to the account titled allowance for uncollectible accounts. And once again, that is a contra asset account, and it is related to the accounts receivable account. And the difference between an asset's account balance and its related contra account balance is called the book value. The book value of accounts receivable represents the amount of money the business plans to collect in the future as shown on the balance sheet. So unfortunately, as much as it may sound bad as it may sound, some businesses just know that they're not going to collect all the money that they sold on account. So let's take a look real quick at a transaction here. You can see that Branson Amusement Company estimated uncollectible accounts expense of 0.8% of its total sales on account. During the current year, Branson had a credit sale of $248,500. As of December 31st, record the uncollectible accounts expense adjustment on the worksheet. So what we're going to do is we need to first figure out how much uncollectible accounts expense it is. So just a simple formula that we want to take. We take our total sales on account times the percentage equals the estimated uncollectible accounts expense. Now I will note this, that if they do not have the total, for whatever reason they don't know their total sales on accounts, you can use your net sales as well. So we'll take, for in this case, our total sales on account was $248,500. We're going to multiply that by 0.8%, and that'll give us our estimated uncollectible accounts expense of $1,988. So we have three accounts, and actually it's kind of a fooler. There'll actually be one that won't be used, and we'll make sure that we point that out to you at the end. And we are going to put this into our worksheet, and this will deal with columns 3s and 4s and our adjustment columns on here. So the first account that a lot of people think will impact it will be accounts receivable. And we're going to just bring over, for demonstration purposes, we're going to bring over the balance of accounts receivable. In this case, it's $14,710.98. The next account that we're going to have is our uncollectible accounts expense. And it's an expense account, so therefore it's going to have a debit normal balance, which means a debit will show an increase, a credit will show a decrease. The next account that we're going to use in this type of a transaction is going to be our allowance for uncollectible accounts. And once again, this is a contra asset account, and it's contra to accounts receivable. And as you can see in our trial balance columns, we actually do have a little bit of a balance on there of $498.59. So we're just going to put that in there so we can kind of figure this transaction out. Next thing we're going to do is we now need to account for that 1988. So our allowance, our uncollectible accounts expense, we've estimated that basically that's going to cost us $1,988. What we need to do then is we also need to put the credit entry of the allowance for uncollectible accounts of 1988. Now, if you notice, one quick thing that you need to notice is accounts receivable is not impacted, and that is correct. When we move further on to the various worksheets in the financial statements, such as the income statement and the balance sheet, then it will be impacted and we will see it move. But right now, for the adjustments, we're not even touching the accounts receivable because this is an estimation, not the actual part. So then what we're going to do is our new balance then will be $2,486.59 for allowance for uncollectible accounts. But once again, we're only going to put our estimated uncollectible accounts expense in there. So allowance for uncollectible accounts will be a credit of $1988, and our uncollectible accounts expense will be a debit for $1988. And that's how you record and analyze a uncollectible accounts expense for a business that sells things on account. Hope your debits equal your credits, and you continuously keep adding credit to your owner's equity.